Hey guys, welcome to video 2 of the advanced training series. Now, in this video we're going to go over advanced support and resistance, okay, using TradingView. Now, what we're going to be doing in this video is showing you how to use multiple time frame analysis to find the best support and resistance levels, okay. Now, to do that, we want to start with the weekly time frame, okay, so you can change that by here. You can go into weekly, okay, and we want to look for the most crucial levels first that just stand out. So basically we've got a level around, we've got a level right here, okay, which is at about 8,000-ish, which is our good psychological number. Okay, we can see more touches of this level previously here, which have acted as points of resistance. So keep in mind, guys, each one of these candles is one weekly time frame, okay? So we've had one touch there, we've had multiple rejections here. Okay, we went for 1, 2, 3, 4, 5, 6 weeks in a row. We've basically, 5 out of the 6 weeks we've touched that 8,000 level. We've gone above that 8,000 level, okay, in 3 of the weeks out of the 6, but we've never closed above the level. Okay, so you want to see the candle body closing above points like this. So this is our new resistance level. Markets come back down, markets push back up again. We've tested that level again. Okay, so you'll notice this big candle here is basically in this week of time frame we've gone from 4,000 all the way up to like 8,000. So we've doubled in price, but then we've come back down again. Okay, so that was another pump in the market at that time frame, and we've hit that resistance level again, and then we've come back down again. Okay, so these resistance levels act as basically they can be one of your profit level zones. They can be one of your profit level targets. Okay, so if you were buying down at this point here, if you were buying all the way down here, okay, and you had some of your sell orders set obviously on the way up at these different points, if you had a sell order set at your 8,000 level, which was your previous all-time high, which is what I do some of the time with some coins, eventually we would have hit that all-time high here, okay, at this point. Now, obviously, that's months of time, but the coin got back to that point again. So, going on that again, we've got another 2 touches of that 8,000 level here, which we've now. So from this week here, we broke through our previous all-time high, our previous resistance level, okay, and then this next week we've come down and we've tested that level again, and then we've bounced up. So we've broken it, we've come back down to test it again, so it's now acting as support, not resistance, now a support level, and then we reached another new all-time high, and then once that new all-time high comes back down again, we tested support at that level, okay, which is just here, and then we got another up move in the market, okay, from that support level. So this 8,000 level is actually a very strong level. Now, what you'll notice over here again is the opposite. When we've broken back through that 8,000 level in this week, and then this week, the next week after that, we've come back up and tested that level again. So the reason we want to do a top-down approach, guys, is the higher the time frame, the more important that level is, okay? Because when we go down to the lower time frames, you'll see that these actual wicks, okay, these candle wicks are actual candles on, say, a daily time frame, a 4-hour time frame, a 1-hour time frame. It'll actually be a candle going down to touch that level, okay? So what we do is we draw a horizontal line. So you come up to this tool here, click on this side, you do a horizontal line, okay, and you can get it around about that 8,000 level, and you can right click on that line. Then you can go into format, okay, we can set the price to 8,000, which is our round psychological number, okay. You can change the style, you can come in here and change the different colors and so forth. Now, sometimes what I recommend to people, depending on how good the level is, if it's a weekly level, you can use a different color that symbolizes, say, a weekly. Like let's say you want to use a you know, green, like this green color that I've got here for a weekly. You can come down here, you can say text alignment. You can align this as weekly. Okay, you can see over here on the right hand side, text alignment. You can change this to either be on the left side, the right side. I prefer it to be on the right side because that's where the price shows. Okay, and you can have a weekly time frame there. Okay, you can obviously make the line bigger and smaller, however you like it. Okay, and then that's our line. So if we hit OK on that line, now that's set for that. So you can go through and you can map out your weekly support levels, support and resistance levels. Horizontal line again, so we can see another horizontal line would be good down about this level here, which is about 6,000. Okay, because we've come down and we've tested that level twice now in current market price. Okay, current market price is the most important of everything. Obviously, you look at current market price. If it's near a support and resistance level, you then go back. Okay, we can see touches of this line, you know, at this point here. We can see touches of this line at this point here. So this indicates, you know, a support level at this level. Okay, so again, we right click, we go format, change this to 6,000. Okay, so that's another weekly support level. Okay, now if we scroll down to, let's go down to say a daily time frame. So you start with your weekly, guys. Now eventually in, you know, 3, 4, 5 years down the track, you'll want to incorporate monthly into this as well. So you want to do your monthly level, then your weekly level, then your daily and so forth. But because cryptocurrency is pretty new, and especially with the last few months of data that we've had in cryptocurrency, we want to use the weekly. And even the weekly is right now at this point in time, it's almost a little bit overkill. Okay, there's nothing wrong with, if you don't want to do the weekly stuff, you can just use the daily and the 4 hourly at the moment. Okay, so if we go down to the daily level, right now back at the, if we go back to our points of interest. Okay, so from a daily perspective, you can see that we've had even more touches of this candle. Okay, there's another day here, another day there, another day here, another day there, which was just off. You know, we got like 50 price points there. Okay, so as you come down to the lower time frames, you'll see potentially more touches on those lines. Obviously, this day was just a massive day, so that candle that we see on the weekly, even on the daily level, this was just a single day that had that massive movement. Okay, so literally a pump and dump basically on that day. Now if we come back over this way, okay, so you can zoom in and out with your mouse scroll wheel, guys, back and forward. If we come back in this way, you'll see what I mean by it starts to paint a clearer picture of actual candle and price movement as you start from the top time frame and work your way down. Okay, so on this is our day that we broke through. This is our day that we went up, made a new high at that point in time, and then we've come back down. Now this day here, in this day we've come back down and we've retested this level. Okay, we've tested this level and then we've bounced back up again. So from a daily perspective, that's good. Okay, and then we've made a new all-time high again, and then we've come back down and we've tested right on that 8,000 level right here. This specific day here, we've tested right on that level, and then prices bounce back up again. So you see over the next few days, as we've come back down, other people are starting to watch these levels at this point in time, guys. As price gets here, more buy orders come into the market, and that's what moves price up. So price has moved up. Okay, and as you get down to the lower time frames, you start to see more support and resistance levels again. Okay, so this little level here at 9,000. Okay, we had a bounce off there, bounce off 9,000 to the upside. Then we came back down and tested our major level, which is our weekly level. Okay, then we've come back up again a bit more, and then we've come back down. We've tested the 9,000 level again from a daily perspective, and then we've shot up again. Okay, so this little pattern here is what's called a double bottom. Now this point here is a double bottom. Obviously there's a technically this is a head and shoulder pattern, inverse head and shoulder pattern, because you've got the head here and the necklines here, but I'll go into that in the next video. So yeah, technically that's an inverse head and shoulder pattern, which is one of our good reversal patterns, which we'll find out about in the next video. Now, as prices come back up again, prices come back down, we're testing that 9,000 level again. We found support there again for the third time, okay, and we've bounced up. Market's moved up again. So as people are watching these levels, they're putting their buy orders and so forth around these levels, okay, guys? And then once they hit their good buy orders, in line with our Fibonacci levels and everything else that we've learned as well, that's a good place to buy. So price has moved up again. We've come back down. Now what's happened in this circumstance is the market's come back down again. We've closed below that level, okay? We've come back down and tested our another weekly level, okay? Price bounced back up again. Now this 9,000 level, so if I put that in as a daily level, okay? So let's call this one, put that in at 9,000 style. I'll make my dailies red, okay? Text red as well. I'll call this one a daily, okay? So you can either use these same colors, guys, or you can make up your own colors, okay? So if I have that as a daily, I then see, okay, 1 touch, 2 touch, 3 touches, okay, then we've broken below that level, retested our weekly, which is our higher time frame, okay, which is more important than our daily, and then we've come back up, we've retested our daily, and then markets continue to move back down again. Now right now, at this current time and price, we're retesting our 6,000 level, which is our strong weekly level, okay? So right now, yeah, this is a good time, this is a good time to buy in the market right now. Combine that with everything else you've learned, check your Fibonacci levels and so forth. That's how we do multiple time frame. Now if we go down to the 4-hourly chart, guys, as you can see, we start to get more touches of this line. We've got one here, okay? So see this point on the daily, okay? On a 4-hour time frame, as price was moving back down, we actually touched our daily level within that day, and then we bounced back up again for a little bit, and then we've come down within the next 4 hours and we've tested our major key level, okay? Now, all of this stuff is really cool to combine with each other. Now, you'll start to see 4-hourly time frames, okay? So this level here, okay, we got 1 over here, 2, 3 touches here, 4, 5, 6, so forth, okay, guys? So another level here is, there's more and more levels as you come down the time frames. Now, the biggest thing, you don't really want to go crazy with your charts, guys. You want to keep most of your lines around current price action. So right now, if we're just looking at the chart, guys, we don't really need to draw lines all the way up at our previous all-time highs and so forth. We don't need a line there because we can see that is our previous all-time high. Okay, we don't really need lines all the way up here at 19,000 right now. You know what I mean, guys? Because at the moment, our price is down around the 6,000 level. So what I recommend to people is have maybe 1 or 2 lines, okay? Let's go down, let's find a lower time frame resistance level. Okay, because what's going to happen is if we break this resistance level at 6,000 and we continue to head lower, we're going to look to see where our next support level is, because what's going to happen is price is generally going to move to those support and resistance levels, okay? So this is why we have multiple time frames, because we want to see when our larger time frames are. So if you're in the market and you're if you're watching the charts all day, okay, you're going to be watching like 5-minute candles and so forth, and you're going to be stressing out in the market, okay? So what I do in a market that we're in at the moment, obviously we're in a bit of a bearish market, I look at my weekly time frames and so forth, guys, and I set my levels accordingly. And I sit back. I don't stress out about price. I don't stress out about what's happening. I've already bought the coins. I've already set my levels. I'm checking my levels each day. I just need to make sure that they're in the right places according to everything else you've already learned in the basic structure. And then as you get into the advanced stuff, you start to bring your advanced support and resistance levels into play as well for your longer term time frames. Okay, so weeks ahead of time, we're going to be looking for price to retest. From a weekly time frame, we're going to look to test the 8,000 level. If we break the 8,000 level, we might get some daily touches on the 9,000 level. Okay, and then so on and so forth as you move up the chain. As we get up higher, this point here becomes a good one because we had a big wick. So as price starts to break these levels, then we go in and we draw our higher levels as we need to. Because otherwise what will happen is, guys, you'll have a chart, you'll have so many lines everywhere, you'll get confused, and these change, okay? These change accordingly based upon where price is going and where price is hitting. If all of a sudden we come down lower and we make another low down here and price around about this point here where we've had a touch here, a touch here, and we've come down and tested it here during that time frame as well, somewhere around 3800 level. That would be our next weekly long-term time frame to look for if we break below these levels here. Okay, so advanced support and resistance, guys, is all about finding your multiple levels on multiple time frames. Okay, I wouldn't really go anything below, say, an hourly time frame, guys, because it's too much noise. And when I say too much noise, I mean too many candles in the market. So there's no point there's no point going in and putting in a level here, 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 because there's just too many. There's too many touches. This is only 100. What's that? A couple of hundred price points of action. So if I came down to my hourly time frame and I started doing support and resistance levels on the hourly time frame, I'd have one here. I'm gonna have another one at this point here. From these touches over here. Okay, so you can see touch there, touches here, touch here, touches here at these points. Okay, and then we're going to keep going down. So we've got another level here. If I do this on the hourly, I'm going to end up with my whole chart is just going to be full of lines every couple of hundred price points. So we don't really want to look at that. We don't need that many lines. What we want to do is we want to find out our key lines. Okay, because when you zoom out to like the weekly time frame, you can see here, guys, like in 2 weeks we've moved from, say, 9,000 to like 6,000, and then on my hourly time frame, I just drew in like 5 or 6 support and resistance lines on the hourly. Now, in the grand scheme of things, we're checking price maybe once or twice per day. Okay, so there's no real need for hourly time frames because we don't really need to go that low. The only time you would kind of be checking, the hourly and the 15-minute time frames was if you're looking to, if price is in a good buy area at the moment, and you're looking where price has been touching most recently. Okay, but you don't have to go in and draw in support and resistance levels on your hour time frames, your 15-minute time frames, and so on and so forth, because it's literally just overkill. Okay, but we want to go from weekly, daily, and at least the 4 hourly, because the 4 hourly is important because there's 6 candles in every day. 6 4s are 24, 6 candles in every day, guys, and we're checking once or twice a day. So we're going to be looking. There's going to be 3 to 6 candles between our daily checks of our account, and within those 3 to 6 candles, a lot can happen in a whole day in crypto world. So I hope that made a lot of sense, guys, and thank you for tuning in for video 2. Next up with video 3, we're going to be going over a whole bunch of different candlestick patterns and so forth. So thanks for tuning in.